Hello, everybody. Welcome. It is the Monday that people dread. This is like the Monday of the year that more people actually. Whoa, man, I've got some feedback here. I don't know if you guys can hear that. Let me turn this down over there. There we go. This is the Monday that more people call in sick to work than any Monday of the year because of the Super Bowl. Can you guys hear and see me okay? Hi, Karen, Eric, Gene, Alonzo, Steven. Man, we got a full crew. All right. Excellent. Well, I'm hoping you all enjoyed the game yesterday, regardless of who you were rooting for. Obviously, if you were a Chiefs fan, you were very disappointed. Personally, I didn't have anything on the game other than some square pools. Really didn't care who won. I do really like Saquon Barkley a lot, so I guess in that regard, I was probably rooting for the Eagles. But without having a fish in the game, which hopefully my Bears will be in it next year, I guess I was rooting for the Eagles because of this Super Bowl indicator. And yeah, Jalen Hurts, thank you for pulling it out. And I think the market is very happy that you pulled it out. Um, you know, actually, did I make any money, Gene? No, but my foundation did. And those of you that actually bought a square for my square pool for my charitable foundation, thank you very much. That was great. But there's all sorts of indicators out there, right? And we look at so many different things on a daily basis. Technical performance, we look at our charts, we look at our indicators, we look at fundamental things. Investors are looking every which way to try and pick movement in a stock or the market overall, past performance, current events, whatever it might be. And if you look it up, and yeah, you can Google it. I've actually covered a bunch of these for some news outlets and for the CME. I've written some articles on them. There are these odd theories and indicators that are out there, like the Sports Illustrated swimsuit edition cover model indicator, the Big Mac indicator, and then, of course, the Super Bowl indicator. So the Super Bowl indicator, okay, is an indicator which I don't even remember the guy's name who came up with it. Okay, but it is really darn accurate. Okay, and what it does, it assigns an outcome for the Dow, okay, for this coming year based on who wins the game. And history says that if the NFC team wins, which was the Eagles this year, man, this cord is really bothering me. If the NFC team wins, the Dow's going to end up in positive territory. If the AFC team wins, the Dow is going to be in negative territory. Now, obviously, last year with the Chiefs winning, it was a massive year for the markets, right? Well, there is no theory, there is no indicator, just as we always talk about and how I always talk about on every single one of my webinars. There's no indicator that works 100% of the time, but you know what? This thing actually works over 70% of the time. It's actually pretty darn consistent. Since the beginning of the Super Bowl era, the Super Bowl indicator has been accurate over with yesterday's win with the Eagles. Okay. We can, with 70+% probability based on that, believe that the Dow is going to be positive this year. Okay. It's unbelievable. Again, not that if the AFC team wins, things are going to be awful, but this is a good one. And I just did an interview. It's going to be shown later on. And I know also I'm going to be on Fox Business this afternoon at 2 o'clock Central with Liz Clayman talking about, I think, some of the ads. But do these companies actually make money off of these ads? Okay. The two, and let me go to my charts here. Hang on one sec. There we go. So the two ads that people out there, based on surveys and if you Google it, Today Show, USA Today, Rolling Stone, the two ads that said that people said were the best ads were the Budweiser ad and the Frito-Lay ad. Okay. So how does that actually flow into the stock itself? Well, let's look at Budweiser. Okay. Unchanged on the day. It's actually down a nickel on the day. Okay. Even though they were voted to have the best ad yesterday. Frito-Lay, which is owned by Pepsi. Let me put Pepsi up here. Stock's down. So personally, I know these companies, spend, yesterday was a record. It was what, $8 million for 30 seconds, right? They build up, they prepare the entire year for their Super Bowl ads, and great, but what is their performance on the stock itself? I don't know, maybe in the next earnings report, maybe we'll see from Budweiser or from Pepsi here that Super Bowl ad had something to do with their performance. I'm not so sure about that. So in the interview that I had this morning, which is going to be aired later on, I said, great, it's fun to watch them and you can rank them and blah, blah, blah. But I'm not going to make a trade based on what the commercial was, what the ad was. In fact, if I look at Pepsi here, I want to be a seller of Pepsi. If this thing hit back, up here towards the red line, the 50-day moving average, I want to short Pepsi. And the same thing with Budweiser. It actually, this 50-day moving average right here is kind of right here. To me, that's almost set up here for a short. Okay, but it's fun to watch. It's fun to think about the game itself and the consequences that the game might have on the market. How many of you were rooting for the Eagles last night? And yeah, okay, fine. I showed my hand a little early here. That's fine, everybody. You got me. Yeah, the word of the day today is Eagles. Go ahead. Go put it up there. We'll get it up there. And we got our new shipment of Market Minds swag. So everybody that is owed swag from the last couple weeks that was waiting on the new ones, we got it, and you'll get it. The winner today will get the new swag as well. Okay, let's look at a couple stocks that I am focused in on today. Okay, Super Bowl's over, fun stuff, good stuff. The market actually was down a little bit when we opened up yesterday evening, Sunday evening. And then I'm sure this had absolutely nothing to do with the game, in my opinion, the domination. But then, things started picking up again. And here we are right now. S&Ps are up about 40 points. So we're almost back to the point of everything that we had given back on Friday. I actually had an interview this morning. I'm not sure how many of you tuned in to Schwab Network. I had an interview this morning where I talked about three stocks, IBM, AMAT, and Futu, which I'll go through here in a moment. But then, in the interview, the anchor, Nicole Petalides, also said, what do you make of this market, right? And I said, well, Nicole, if you're a trader, you got to love this market. This is an unbelievable market to trade in. If I'm an investor, when I'm looking to stash something away for in my 401k or, retirement account or holding for longer, yeah, I'm going to be a little bit, pickier. But this is an unbelievable environment for trading. I want, from a trader's perspective, not maybe from a social or what's the right word? I'm trying not to be political here. So not from an effect on how it makes people feel, but all the inconsistencies and all of the stuff coming out of the White House. If you're a trader, you love it. You may not love it if you're an investor, but you love it if you're a trader because you are on your toes. Volatility is here. It's not going away anytime soon. And obviously, those of you who have, been with us for a while, whether it's just from the beginning of this year, so 5-6 weeks, end of the quarter, basically since the election, so end of last quarter, you know that this volatility that we're seeing, a lot of it because of the administration, it's great for trading, guys. It is great for trading. We have got to take advantage of it. And yes. Before I go into my first stock that I talked about this morning, which was IBM, I'm going to wait until you guys all smash that like button. Come on. Michael Clark, let me know when we have at least 20 smashes on the like button, because otherwise I am not going into my review on IBM. All right. Smashed, Eli. Thank you. Or Lisa, I guess. Thank you. RDB. I'm going to call you RDB from now on. I hope that's okay. Robert? Yeah, let's go. Gus, come on. Smash or what? 29. Great. All right, let's look at IBM. And I'll wait till we get to maybe 40 for the next one. Okay, so IBM, great earnings report. Big gap up here. Okay, huge gap up. And now we're off of those highs. We're off of the highs that we set, or that IBM set right after earnings. And now we're back into a really critical point. This is exactly what I said. And the gentleman from Schwab Network, who is their technical guru, Rick Duquette, said the same thing here. This area, 246, 247.8 area right here, critical. This pullback right here, it's the bottom of this gap here. Okay, I think this is a really, really good place to reload, to take an upside position. And one of the other things I talked about was implied vol. Obviously, we knew it was going to come down after earnings. Implied vol bottomed out, and it's just ticking up a little bit here. So whether you're bullish or bearish in IBM, this is a great time, in my opinion, to buy some time, to have maybe a calendar or a diagonal in either direction. Personally, I'm bullish. Okay, I'm looking to do something for IBM to get back to where we were right up here after those earnings. So, that's what, 16, 17 bucks higher from now. Okay, I don't think that is really out of the realm of possibility. And in fact, if we look going out to March expiration here, guys, if we look at March expiration, that is right about what the expected move is. Okay, so I'm just throwing that out there. I'm not giving any trade recommendations. What I'm saying is I like the upside here. If it fails, if IBM fails at this 246.7 range, whatever we're at right now, then yeah, you can look for maybe this thing filling the gap here. But really good opportunity because of the cheap implied volatility to buy some time. All right, how many are we up to before we go into FUTU? Mike Clark, how many smashes do we have before I go into the second stock I talked about this morning on Schwab Network? Sitting at 36. Sorry, guys, I don't get 4 more. I'm not talking about it. We got a bunch of people out here. Come on. I need 4 more smashes. Oh, 35. Someone disliked? What the heck is going on? Thank you, Eric. $39. Come on. Someone. Oh, Jerry, did you make 40? Did that make 40? I'm hoping we could talk about Futu. And Mike Clark, Chris, lots of folks. There we go. Boom. Let's talk about Futu. Now, my last one, AMAT, we need to get to 45. Okay. Futu here. Okay. Kind of a little wishy-washy chart. It's a Chinese company. Okay. They've been pretty volatile. The 200-day moving average, which you can see here, was obviously really, really massive support. Okay. And the Chinese stocks have started to make a comeback. They've started to make a comeback. Now, before I go into what I talked about with Futu, let me show you another one where we actually took a bearish position this morning. Okay, and it's a Chinese stock. And this was in Baidu, and that's because of this massive resistance here. So we took a bearish position in Baidu this morning on this run up. Futu, on the other hand, though, has a different looking chart. It really does. And I can see this thing getting up to fill this gap. There's a gap right up here, guys. If you look right here, that gap, I think it's 126, if I'm not mistaken. 127 area. Okay. I think we get there. I really think we get there. Volatility, pretty much nothing to write home about. It's not cheap. It's not expensive. It's kind of right in the middle here. Okay. So I think this is an opportunity to, unlike in IBM, where maybe we want to buy some time because vol is really, really cheap, in Futu could be a good opportunity to just buy a vertical call spread or maybe a butterfly, a broken wing butterfly. I just talked about a call spread this morning on Schwab Network. Okay, but again, I like targeting that 126.7 area of that gap. Oh, we're at 45. Great. Okay, we're going right into AMAT, but let me put the Hulkster back up here for a second, guys. Let's put Hulkster up here with Eagles. Could have been the only time that I was ever rooting for the Eagles. I mean, maybe when they were in the Super Bowl 2 years ago, just because I wanted the NFC team to win for the markets. But I do like Saquon Barkley. He is, outside of Bears players, probably one of my favorite NFL players out there. I'm going to keep this up here for another minute. Then we're going to go into AMAT, and then we are going to spin the wheel early today. So Mike Clark at about 11:22, we're going to cut off any entries for the wheel. Okay. AMAT. So AMAT, I mean, this is like closing your eyes and throwing a dart at a dartboard. Okay. There really, to me, is nothing looking at a chart, looking at the technicals here that shows, anything other than anything can happen. However, there are a couple very similar stocks that have already reported that really took off. KLAC is one of them. KLA 10 Corp. LRCX, Lam Research, is the other. Okay, very similar, same type of stock. Okay, so Applied Materials. We know, again, anything in the AI tech space, chips, whatever it is, total crapshoot. But I believe there is a really, really nice, inexpensive. We always look for opportunity, right? We always look for opportunity. Now, this one is different than the other two because they have earnings this week. They have earnings on Thursday. So this one is kind of as I explained this morning, a binary trade, kind of a boomer bust kind of trade because of earnings. Okay. But what I was looking at this morning was just a simple upside call spread. If it follows the lead of those two other stocks, KLAC, LRCX, I was looking at this call spread. Now, stock was a little bit lower this morning. My entry point was a little bit lower, but I like this a lot because as you can see here, the 200-day moving average is right up here, close to that 195 area or so. And the expected move here is right around 12, 13 bucks, which also takes us up to that same area. Does everybody see that? Okay. Great. Mike Clark, do we have a closed wheel? Yes, we do. Yes, we do. Yes, we do. All right. So the first post Super Bowl spin the wheel is on the docket here. And there it is. Okay, wonderful. All right. Decent wheel today. Not breaking any records, but a decent wheel today. Everybody see it here? And we got a refresh. Remember, can't win twice in a week. Got a refresh, though, today. So let's have at it. Here we go, guys. Here we go. Today's winner, Stephen Waldorf or Thomas Swift. Who's it going to be? It's right there. Oh, are you in the house, Thomas Swift? Are you in the house? Thomas Swift could be the first person to get the new Market Mind swag. Oh, and that was a quick response from Thomas. Yes, he is. There we go, Thomas. You know the rules. It's up there on the board. It's up there on the screen right now. Please shoot me an email. ProsperSwag at prospertrading.com. All right, guys. Now we can all set our sights on baseball. Football is officially over. Nothing to worry about, nothing to think about until the draft, which I think is in April. Pitchers and catchers reported today, at least they did for the Cubs. Let's go Cubbies. You know what? I'm letting it out there right now. Tomorrow's word of the day is going to be Cubbies. I'm letting it out. I am so excited for this season. All right. Everybody, yeah, we do have March Madness coming up too. That we will have a lot of fun here during March Madness. That is for sure. We will bring out some fun things to do. Let's play to Bob. Actually, yeah, Ernie Banks' birthday. I know he's not with us anymore. He passed away a few years ago. Ernie Banks' birthday, I believe, was 2 days ago, if I'm not mistaken. Steve, there probably are hockey fans, but I like the Blackhawks because of Chicago. And yeah, I was definitely a bandwagoner back in, when we won 3 in the mid 2000, what was it, 12 to 16, 11 to 16 range. All right, everybody, have a wonderful, wonderful day, and we will see you tomorrow. Adios.